Hello, Adam Hewison here for the Market Club 1 p.m. update for Friday, the 20th of May. Lots going on, but first of all, I'm going to talk about what we talked about last night on our show. This is the 52-week rule. We have two stocks right now that are looking very interesting for the weekend rule. They are Sprint Nextel, symbol S, and on the NASDAQ, Amarin, symbol AMRN. Now, in order to qualify for the 52-week rule, we need to see these markets close at or close to the highs. If they don't do that, you do nothing at all. And we also have a 52-week short rule, which we have 5 stocks in line for. Now, these are as of noontime, not as of the close. So if it changes on the close, that's going to be the market itself doing its thing. So go to our website right now, the blog. You'll see the 5 stocks that we're looking to go short for the weekend. So let's go back to the market right now. The big move today has to be gold, which is up $15 right now, up 1%. We're plus 100 in our target. So I'll click on that, and we'll look at gold. And you'll see where our trade triangle kicked in. Now, this is something it happens dynamically, and you can see at 14.9983, that was the buy signal. The market's trading at 15.10, so about $10, $11 in profit right now. And it looks like it's made that turn. Now remember, we've been talking about this market being oversold to the lower end of the range right here, and it's exactly what's happened. So we've made the turn. All of our symbols are plus 100, so you definitely want to be long gold. This is something you have to be looking at. Monthly, positive. Weekly, positive. Daily trade triangles, all positive. We've been saying the longer term outlook for this market is still positive. There's still a lot of uncertainty in the financial markets. So let's go back to our portfolio and look at silver. Silver is not doing quite as well. It's not doing as well as let me go back there and let's go to silver. It's not doing as well as gold right now, but that can change. And I think we've been talking about the bullish divergence in the Williams percent R. And if you scroll this down, you'll see what we're talking about. You see here's the lows right here. That's a very low tick, and yet the divergences are going higher. So I think if we can get this over $36 an ounce, we're currently trading at 35 and change, I believe. Here we are, 35.05. So it has to rally another dollar to really get this momentum going on the upside. But generally speaking, the support in the metals, and I think that's all to do with the uncertainty that's in the market right now, financially, both in the dollar and also with the euro. So let's go back to our portfolio. The S&P 500 cash down 4.11. Just 30%, but a 55 reading, minus 55. Really not too much going on there. We've been looking at this market, sort of looking for the long-term trend remains intact, but you're really sort of going nowhere. And if we go back 5 days, 1, 2, 3, 4, 5, the market's actually a little bit higher for the week. Not dramatically, but a little bit higher, which is a plus. But generally speaking, with the way our triangles are focused right now, monthly up, longer term, which means longer term trend, positive. The weekly down, which means you should be out of the market right now and letting this market decide what it wants to do. One of the great things about trade triangles is you're not guessing about the market. You're basically just looking and letting the market tell you what it wants to do. And of course, we have our trade triangle talking charts right here. And this basically...
The minus 55 chart analysis score that you see here recognizes that there are major discrepancies in trend between the various time frames. This market may be moving into a trading range if it isn't already. So you may want to exit a position and move to the sidelines, or use an alternative technical analysis study if you wish to continue trading. And if you do continue trading, make sure you're using proper money management techniques.
So there you have it. There's our talking chart technology, which you won't find anywhere else on the web. It's a very, very helpful tool to have. You're never alone with that. So again, we are saying it's a trading range. Our trade triangles are saying basically you should be on the sidelines waiting for an opportunity to get back in this market should we get all the signals we're looking for. So let me go back to the portfolio. I hope you all had a chance to see our show last night. If you didn't, it was a 51-minute show. We covered a lot more detail in these markets, and you can watch that on our blog when you have time. Maybe this weekend will be a good time. But let's go back to crude oil. Our next market's a plus 70. It's 99 right now in the June crude oil. Again, this is sort of it was at the lower end of the Donchian channel. We've sort of turned up, Again, this market, 1, 2, 3, 4, 5. It looks like it may close about unchanged for the week, which is a signal that maybe the downward momentum has come to an end. We've seen the market below the Williams percent R, which means potentially an indicator that the market's going to rally from here and touch the 104 level, basis the Donchian channel. So I would say for the most part, it's kind of like you want to be on the neutral side of this market until we get a weekly green trade triangle. When that happens, you want to be long this market in a pretty good way. So let's close that up and go to the dollar index, which is kind of again the same in the same category. It's a plus 55, a minus 55, and really not much going on there. We've had a rally, but basically the rally I think is going to fizzle out. We are looking for this market. We think this market is rolling over to the downside, and I think that's we've hit the upper end of the Donchian channel here. We've had a sort of a rally here. It didn't go anywhere, and I think if we close down towards these levels, maybe a little bit higher for the day, but not much more, then I still think we're in a negative mode. Again, we have our weekly, which is positive, but our longer term is the one we look at for long-term trends. 81.45 still is a negative signal. We've been long short this market since that level, and we're currently trading at 75.45. Again, it looks like the market's rolling over, and it does look like the market is actually, even now, looks like it's lower for the week, and that's the important thing to look at with trends. So let's go back to our next market, and that's going to be the CRB. Actually, I'm going to say the Reuters-Jefferies CRB Index. It's quite a mouthful, but that market's currently trading at plus 55 on our score, and it's up 1.74. Now, again, this is something we've been talking about. We still feel that inflation is going to be a problem. We think these markets are all, and anybody who's around, the cost of gasoline, the cost of everything else seems to be going up relentlessly. So here we are. We have 1, 2, 3, 4, 5. The market's higher for the week. We're coming from an area that's oversold. We also have a bullish divergence, which we've been talking about all week. And now we're finally seeing this market start to move to the upside. I think next week, if we see this market move over 345, I think we'll get a lot more momentum on the upside. So again, lots going on. I want you to take a look at our website on the Traders blog. Look at the stocks we're looking at to go short this weekend. Should we see a real bad close, towards the lower end of the range, we want to be short those stocks for the weekend, because percentage-wise, it could be a nice trade percentage-wise, and I think that's something we want to really pay attention to. So we'll be doing an update this weekend, so stay tuned for that. Come into the website, check us out, and be sure to watch our show every Thursday at 7 p.m. I think it's a fun show. You're part of the show. We want you to call in, but again, we appreciate you stopping by to listen to our commentary. As you can see, the goal is still plus 15 for the day, up over 1%, and it's just ticked down to plus 80, rather, from a plus 100, which was just 2 minutes ago. So you can see how it's changing, but nonetheless, the trend, you definitely want to be long gold right here. It looks like we've got something going on the upside. But hey, this is Adam Hewison for Market Club with the 1 p.m. update for May the 20th. It's a Friday. Watch the 52-week rule this weekend.